Okay. Hey, hello, everybody. This is Rick with Hit and Run Candlesticks. Thank you. Thank you so much for joining us this evening, Monday, December 2nd, 2024. Wow. Pretty quick. We're going to be writing checks with 2025. My goodness. The year has gone by. I hope everybody has done what you're going to do. I hope everybody is made your money in trading because there's not much time left, bottom line. So I hope tonight I can give some answers. I hope, please ask questions tonight. I absolutely love questions. I have this little disclaimer up there because I've got a little PowerPoint. It's just on all my PowerPoints. Just to remind you that investing involves significant risk. And I'm not going to read that whole thing. Bottom line, only trade with money you can afford to lose, not what you can afford to win, okay? Only trade with what you can afford to lose. And that's pretty negative, I know. It is. Most traders that's been around for a long time, honestly, they've seen some bad times. Most, if not all, successful traders, they've seen some bad times. And it's not the market, it's them. It's part of the learning process. Anyway, I hope that, whether you're with Hit and Run Candlesticks or Right Way Options or BYOB Trading, you take advantage of the education side as well as maybe trade ideas or things like that. Take advantage of the educational side. Absolutely worth its weight in gold. All right, let me stop with that. Boom, right there. The road to wealth is a winding road. I've got, this is 2 of 7 slides, I think. So please bear with me, and then we're going to get into looking at some charts, okay? The first thing is you've all heard about the road to wealth account. I hope you have, and if you haven't, then I hope to share it with you tonight. This is something that's very near and dear to my heart. This is something I've done in the past, not just once, but a couple times, 3, 4 times. I don't know. I have to go back and look. It's not an easy thing to do, but it's very doable. I've proved it. And basically, it's doubling your account. In the past, I've started with $5,000. I've started with $100,000. This time around, I'm starting with $3,000. And I can tell you right now, this time I'm not stopping, okay? I'm going. And what I mean by that is several years ago, 5 years ago, 5 years ago, give or take some months, I started with $5,000 and I shut it down just under $80,000. And in about 18 months, I believe. I'm not going to shut this one down. So if I can grow this to $500,000, good for me, and I hope everybody is along for the ride. And I don't mean copy trades. I mean learn what I'm doing here. Okay? So starting with $3,000 just 2 months ago today, or is it tomorrow? I can't remember. 1 or 2 days don't matter. 2 months ago, my goal is to double my money. I'm on my way to it. We'll get into that a little bit more. Double it within 1 year. And I do invite everyone to follow along. That does not mean copy trades. That does not mean trade for every single trade that I trade. It means learn the whole process behind doubling your account or simply making money. Okay, that's all. Just making money. I post all bank statements, which one will be coming out in a few days and it'll be posted. This is a real account. This has real money in it. And I give out, bank statements to prove where it is, weekly reports. All members have daily details, okay? So if you're a member or a trial member, of course, you guys, any members here, you can be in the room at any time. You can say, can I see the account, how we're doing? And that's not a problem. Most of the time, I will overshare it anyway, because it is something very near and dear to my heart. And one of the best ways to stay on track is to be public and share it with everybody. Look, I'm human. I'm like the next guy. I don't want failure. So I'm going to work my butt off to make this thing rock, okay? I'm going to make this thing rock. Ed just posted a link just above there in the chat that I will have a free open house on Thursday, December 12th from 8:45 to 4 p.m. Eastern. I would invite everybody to register for it, and that is the link up there in the chat. For anybody watching this on YouTube, I'll make sure that this is posted in the YouTube video or, down below. So all Hit Run Candlestick members have complete details. There is absolutely nothing behind the curtain. There are no curtains. There are no curtains, so I have to keep my clothes on at all times, okay? Hit and Run Candlesticks members or trial members will also have, which you always do, you have the app so you know whenever we are entering a position or exiting a position. I want to talk about something right now that's coming up, and this will be Fast Track on the Road to Wealth, where I get into some pretty great detail of not just what I'm doing, but what it takes to double your money or to make money. I like to use the phrase double your money because that's a great goal. It is a terrific goal. And when you can do that, it's just a tremendous feeling. And then once you double it again, then double it again, so on and so on. Anyway, coming up here on December 17th, starting at 3 p.m. Eastern, that will be 1 hour before the market closes. We will kick this off. It's only $50 if you want to join in. For non-members, it includes 1 month of membership, okay? So, it's a pretty good deal there. Anyway, if you want to do that, this is my account right here. I'll be showing you this tonight, and it's a tiny bit more than this. Not a lot more, but a tiny bit more than this. When we clipped this out, that was there. That was a total of the account, $4,400 right in there, okay? So click that link if you want to register for that webinar coming up on the 17th. All right, let's talk about the Road to Wealth account just a tiny bit, because whether or not you set out to double your account or whether you, I would hope everybody sets out to make some money, okay? I would hope that. It's important, and I've got something here. I beg of everybody to use this little tool. This is a fantastic tool right here, and it's to help. Let me move this back over here, okay? Use the Road to Wealth calculator. That's what this is. Always know where you are. Always know your daily, weekly, and monthly goals because they change. Continue to take profits into strength or weakness if you're trading short, and keep your trading accounts growing. I want to talk about this now. This is this calculator. This is one of the most valuable things to me right here. We only need that part of it. We only need this part of it. And that is, no matter what your account size is, you enter it into this space, and it calculates what you need to do for to double. In this case, it's set up. Honestly, Ed set this up for me, and I'm sharing it with everybody. Ed is sharing it with everybody. Right Way Options is sharing it. BYOB Trading is sharing it. Hit Run Candlestick is sharing it. Everybody, it's out there. It's free. There's no catches. You click the link. Nothing to sign up on. This is worth its weight in gold, I'm telling you. So you enter your starting account balance right here, whatever your account balance is. It tells you, it calculates what you need to, this is average, okay, per day or per week or per month to double your account. This is very, very important. Every day I wake up and look at this. Every single day. I kid you not. Every day I plug my number in, and then I see what I have to do because it's important to know this information. Position sizing. This is a tricky one, okay? I'm not going to lie to you. This is tricky because what I do here and what you do here might be two different things. What I do here is based on this right here, 36 years of experience. What this right here is, this number is based on is the fact that I have skinned my knees. I don't know what skin. SK. I've skinned my knees a couple times. I've got bruises on my elbows. What I'm trying to say is I have lost money. I have made money. Now, the cool thing is when I lost money, it was back in the early days, and been a while since I've lost money, but it could happen. It could happen. Now, don't get me wrong. Do I lose money every day? You bet your sweet bibby I do. Every day. Well, not every day. But, I'll show you on my account. I lose money. I have losing trades like everybody else. Okay? It's how you manage all that. And that, we'll get to that. But this is tricky. All right? I use a big number here. That's not my number, by the way. I use a bigger number. But I feel that I can back it up with success. Now, if you're just starting out or, your trading has been a little bit shaky, well, you don't want to put a big number in there. Maybe you only want to use 5% of your account. Well, what that says is you can only spend $250 per position. Not very much money. Here's a little news flash for you. You don't have to have big numbers to make money. All right. This is one of those amazing things that you don't realize until you start doing this. You don't have to buy big dollars to make money. With a $5,000 account, put 5% per position. One single trade only has to move up 9.5%. Two trades only have to move up 7.75%. All right. Three trades have to move up just a little bit over 3%. That is not very much money. And we are talking about, where's it at? Where's it at, Rick? Come on, there it is. Doubling your money, starting with $5,000. Notice we can change this to $25,000, just like that. Hit, put your money in there and enter it. There's how much money you have to do per day, per week. And when I say per day, by the way, I'm not a day trader, so I'm not pushing day trading. I'm not saying you have to close out $119 every single day. I'm not saying that. I am pretty much, I am kind of saying that I want to make $600 a week, $595, because that keeps me on track, okay? That keeps me on track. And then that's the monthly total. And this is net profit. So, your profits, your losses, bottom line, what's net, that's what we have right here. You can plug in your percentage that you want to put per trade, and you can see with a $25,000 account, 5% gives you $1,250 per trade. You only need to do 9.5% a day on average, or or 4.37% to two trades, or a little over 3% on three trades. That's all you have to do. This right here is so, so important. Let me copy this, and please, 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 see if I can do this right. There we go. Please keep that, okay? Keep that link. I have it here if anybody needs it. Don't worry about it, okay? All right. Let's move on here. The easy part is what we're going to talk about tonight. All right? The easy part is what we're going to talk about tonight. Safely getting to your, and when I say the easy part, we're going to look at some charts. We're going to talk about some of the rules that I use, trades. We might even find some great trades for tomorrow or for the next 10 days maybe. Let's make a list. Let's put it together, and let's watch it all together. All right. So when we're trading, we want to get to our destination. What is our destination? For me personally, it's to double my account, and then to double it again, and then to double it again, and then again. You get it. Compounding. It's truly amazing what happens when you can do that. So the first question I want to ask you is, why did the chicken cross the road? Seriously, why did the chicken cross the road? I know the answer to that, and I had to look it up anyway. I had to Google it just because now it's like, well, to get to the other side, duh. Well, maybe there's something else. No, that's pretty much the answer to get to the other side. Okay? Why do we use stop signs in red and stop signs and red lights? Because we're getting to a destination. That's what a cross the road is. That's what the chicken did. Chicken crossed the road to get to a destination right here. Okay? Why do we use stop signs? Red lights. We're heading down that road. We're getting to our destination. But we want to get there safely, don't we? Right here. Safely. But we want to get to that destination, don't we? We want to get to that destination, and we want to get there safely. Why do we go on lights after looking both ways? If you're at a four-way stop, I mean, come on. Everybody, a green light, don't you kind of glance right and a little bit left just to make sure there's not some bozo flying through that intersection, squishing that red light a little bit? Why do we look? Because we want to be safe. We want to get to the destination, but we want to be safe, don't we? Why do we slow down at school zones or speed bumps? Because we want to be safe. We're on that road. That road is taking us to our destination. But why do we want to be safe? Because we want to get to the destination. We don't want to take a pit stop at a hospital. And we don't want to take a pit stop at something worse than that, now do we? But we want to get to that destination. We want that. But we also want to get there safely, all right? That's important. And that's why I say you have to know where you are daily, every day, weekly, monthly. How are you doing? Because if you're not doing so good, you need to make adjustments. Don't wait till it's too late. Don't wait till it's too late. Let's see, now what? PowerPoints. I don't know how to do it. Now, the hard part is navigating your account to your destination. That's the hard part. That really is hard. Let's see, can I back this up? Back up. All of this, what am I going to do here? The easy part is charts. I can teach you that. In fact, I'm going to teach you that tonight. I teach it every single day. I teach it at every single webinar. And do you know what I was asked today? And I teach it all the time. And something I was asked in the room today, I thought it was, thank you very much if you're here. Thank you. Somebody says, I have troubles with being too greedy. That is the hard part, okay? That's where we are, the hard part. Managing your account, not just greed, but, when to trade, how to trade when things are not good, how to trade when things are good. What do you do? Do you know that I didn't buy anything all day long today till the very end of the day? I have my reasons. I'll be glad to explain that. Somebody reminds me a little bit later so I don't forget. We want to navigate to your destination, making money, double your account, whatever it is. Whatever it is. But we want to get there and we want to do it safely. We don't want to blow our account up. We don't want to take big losses. We don't want to do anything like that. Okay? I have 7 simple rules that I would like to share with you. Okay? Now, this is not 7 rules and then you're done. That's not what this is. This is 7 simple rules that is just one section of the road to wealth, the way I look at it. All right. Number 1, get my pen here so I can write, is do not take big losses, significant losses. Do not. That will crush an account. That will absolutely crush it. Know when to trade and know when not to trade. Members of Hit and Run Candlesticks, you have heard me talk about this till I'm blue in the face, red in the face. You have heard this over and over and over. Not being here. Can I do this? Make that red. Yeah, it will work. Not obeying this leads to this. This leads, number 2, leads to number 1. Number 1 leads to you not making money. It's that simple. It really, really is. A plan must be laid out. Do you know that every time I say a plan must be laid out, you know what I think of is years ago, and well, not even so long ago, I hate it when people talk about a plan. I hate it. I do. And the reason I hate it is because years ago, I thought a plan required sitting down and writing a 19-page plan on a trade. Good grief, I am not going to do that. But what I realized, you don't need to do that. If you can't put your plan on a 3.5 by 5 index card, your plan's too damn long. You've got too much in there, too complicated. That's all you need. So don't feel bad or don't feel like you can't do a plan. I can do plans with you right here tonight. I will do trade plans right here tonight. 1, 2, 3, they go fast. Market must be trending in your favor, all right? Look, I saw today, let's just say I saw today. People buying short. And why? Why? I mean, do you like walking into a biker's bar and start telling yo mama jokes? Do you like that? I mean, you're going to get punched. You're going to get demolished. When the market is bullish, trade bullish. When the market is bearish, trade bearish. It's simple. It is so simple. All right? The trade that you're trading. Let's change colors here. How about some blue? The trade that you're trading. Is it in a bullish trend or bearish trend? It must be in one of them. If it's sideways, get out of there. You don't want it. You don't have time for it. So it's got to be trading. Trade a chart pattern that you recognize. If you don't trade it, don't. If you don't recognize it, don't trade it. Case in point, not necessarily today, but I get people asking me about a trade. Why did I take this trade? Or no, let me back up here, okay? And I will give you an absolute. This is a case that absolutely happened, all right? So at the end of the trading day, and I offer a text. Anybody that wants to text me, I offer text. I won't answer the phone. I'm telling you that right now. I don't have time. But if you want to text me, I will get back with you in a text, or I'll even call you in some cases. This was a case that I called because the person has been trading for some time, and here's what happened. I entered into a trade. They entered into the trade, and they text me, Rick, I don't know what to do with this trade. And I kind of know the person, all right? So I call him up. I said, dude, what's going on? He says, well, I don't know what to do with this trade. I don't understand the chart pattern. You guys know me, right? What the hell did you enter the trade for? And I, just like that. I mean, that's me right there. Seriously, why did you enter the trade? So do not enter squat unless you know what you're doing. If you want to double your money, that's what you do. If you want to make money, that's what you do. All righty? All right. Always, this is something I always do. It doesn't necessarily have to be what you do. This is what I always do. I enter near the T line or the trend indicator or both because those are my world. All right? Those are my world right there. So that's very important for me. May not be important for you, but that is important for me. All right. Let's get started, okay? Before we get started, I do want to remind you that if you like what you see, if you think you want to take that next step, for those that are not members of Hit and Run Candlesticks, on December 17, 2024, I will explain it absolutely. And do you know why we're giving a month away free? Look, it's because of the hard part, all right? I can teach you the easy part. In fact, tonight, I can do that tonight. The hard part is what's between your ears. The hard part is management of your overall account. Not one single trade, but your overall account. That's the hard part, okay? So that's the part that we're going to talk about tonight. That's the part we're going to talk about, along with charts, our setups and all that. But that's the part that you need help on. And that's the part where in the trading room or where you can communicate with other traders is a place you learn how to manage to grow your account. All right. It's not as simple as give me a winning trade. I wish it was. I really do, but it's not. All right. With that said, are you guys ready to look at some charts and kind of get this all started here? Let me put this to bed, if that's all right with you. There we go. All right. Did I lose anybody? Is everybody still here? Can you raise your hand? Let me know you're here. All right. Hey, Larry, thanks. All right. First thing I want to do is let's get this out of the way right now. This is important. This is my account. I have to be careful not to give you my account number. All right. This is my account. You can see that I'm in 3 trades. You can see that I'm upside down on all 3 trades. I'm not too concerned. I bought NCLH today. We can look at it. And I bought PYPL today, and we can look at it. I've been holding this UEC dog, and it has been a dog, and we'll look at it, but I'll show you why I'm still holding it. You can see the account right there. The account is up. Oh, let me make that yellow. Total equity in the account is $4,535. It started with $3,000 2 months ago. Let's call it today. I don't know if it's today or tomorrow, but anyway, 2 months. All right, not too bad. It's not one account, and I have, here, let me move this over, set something up. There you go, right there. There's some trades I've been in right there. You can see that I have red trades. I have losing trades. Not everything is a winner. You can see that I had a string of losing trades right here. There they are. Some winners, some losers, but it's the total account management that gets you to your destination, not one single trade. Okay, it's the total of everything. So I'm very open about this. Anytime anyone wants to see it, don't mind showing it. Not afraid to do that because I know where my destination is. I know. Wow, I have a lot of stop-offs. Like the first stop-off is turning this into $6,000, doubling it. My second stop-off is going to be turning $6,000 into $12,000. You know where I'm going with that? So I've got a big destination here. The way it's going right now, I'll get my 3,000 in a couple months, I would say. So into January is what I'm looking for to reach my first destination. I'll stop there. I'll have a nice steak dinner. I'll have myself a cold beer, and then we're going to go back to work and turn that 6 into 12. And I'm still within my 12-month circle, okay? 12 months just to double it. I'm going to do more than that. All right. So you guys see what positions I'm in? Let's go get those out of the way. UEC. This has been a dog. I'm not going to lie to you. It has been a dog. But this dog right here is still trending. This dog has made a low, high, higher low, higher high, and then all it's doing is going sideways. So I'm either going to close this out if it starts to fail, or we're going to make some money when it breaks out. Either way, it's just moving sideways right now, but it's still a dog. Anyway, that's why I'm holding it. It's still holding the trend indicator here. We've had a couple of days where it went below, but patience seems to be working out. That's something in trading, by the way. Patience is important, okay? Frank, how are you? Do you keep your trades a similar position size? Yes, actually. Yes, I do. And let me show you right here. All right. So my account, what is it? 40, we'll say 45.35, right? So let's do this. 45.35. There we go. All right. Now, this is where, this is the difficult part, okay? And I use 15 to 18%, All right. It kind of depends how I feel. We're splitting hairs. Who cares? Okay. So let's just put in 15%. Look, I don't recommend anybody do that. Why do I do that? 36 years of experience. It's not my first rodeo. All right. It's just not. I've ridden a couple bulls before. I've ridden some bears before too. I get it. So I don't want anyone to think that you got to go out there and you've got to use 15% of your account. That is insane. But, where are you in trading? If you think 15% is going to dig you out a hole and you've not been making money, I have a sorry story to tell you. But it's just going to make you go broke. That's all it's going to do. So, but this is what I do, Frank. I use 15 to 18%. So I spent, with this particular account, and this is the only account we're going to talk about, I have another account that's over $200,000 that I doubled 23 to 24. I went from 100,000 to 200,000. Or was it 22 to 23? I don't know. But that has doubled. That's a different animal because it's a bigger account and I can afford to be crazy. With a $3,000 account, you can't afford that. If your goal is to double your account, you cannot afford to be crazy. You got to be spot on. So, all I can spend is, let's call it $700, okay? Now, I buy 99.9% directional options. So what happens is sometimes I have to bump that up. Sometimes I have to lower it down. I can buy one contract. I can buy two. Sometimes I can buy three. It's not too often I can buy five. That's a lot. Not until I grow this account or scale it. All right? Scaling, one of the big keys into making money. So let's call it $700 per position, per trade. That's all I can put in there, okay? Let's see. So then you are in a max of 5 to 6 trades at any time. I doubt that I'm that many. I mean, to give you some idea here, let's go back over to here. There it is. So right here, you can see I've got, we'll call it $3,000 that I can spend, and I'm in 3 positions. All right. So I could spend, now I'm margined, all right. I have $3,000 more dollars, but that will go fast. If I'm spending, we'll say $600 to $800 per position, okay? So I might have to bump it up a little bit, something like that. So I doubt I could get 6 positions. I doubt it. I want to buy at least 2 contracts. I don't like to buy 1 contract. All right, I don't like that. And I'll explain why. Let's go look at that right now. So if I didn't answer your question completely here, please ask again, all right? Let's go look at PYPL. Here's why I don't like to buy 1 position. Now, maybe we should put this right back here, about like that. How much money do I need to make to double my money? Now look, I am probably one of the least greediest people you will ever meet in your life, okay? I really am not greedy. Maybe even to a fault, I'm not greedy. My goal, and my only goal, and I do mean my only goal, okay? Make no mistake of that, is to double my money in 1 year. 1 year is, I only have 210 days to do that. This is weekends out of there. This is holiday, natural market holidays, sick days, time off I'm going to take. This is what I've come up with right here. 210 days to actually trade. But that's, 1 year is what I'm going to put it in. So my only goal is to double that number based on whatever number that is. As I scale my account, that number scales, this number scales, this number scales. All these numbers scale with me. All right? Make sense? So as this number grows, then let's say we get to 12, 1, 2, 3, boom. hit enter. There we go. $12,000. I can now spend $1,800 per position based on my number over here. And this number over here may not be what you use, okay? This, by the way, we're getting into one of the hard parts. This is not the easy part. This is a hard part. It might seem easy until you try it, because all of a sudden you're going to start cheating and fudging. Oh, man. And then what you're going to do, is cheat and fudge here. So what do I have to make? What was it? I don't even know here. Let's make this real simple. Say 4, 1, 2, 3, boom, and do that. So all I've got to do is make $95 a week on average. That's all, net. Do you think this stock here, PYPL, do you think if it was to poke its little nose up here near 90 bucks, do you think that I'll make $95 right here? Do you think it would be? Do you think that would be 95 bucks? Everybody should be typing yes by now. Okay, type yes, so we know. So I know that I'm not the only one here too. And Frank, I don't know, maybe it's just you and me, Frank. Thanks, Zoe. Thanks, B1. You're right. You're right. And with only one contract, I pretty much have to sell it. But what if I had 2 contracts? I could sell one and I could keep one, couldn't I? Yeah. All right. So, but unfortunately, because of the price of it, because I couldn't afford, because if I did, I would be cheating. If I remember right, I'm at 45, so let's change that to a 5. There we go. So around this number here, I would be over $1,000, and that's cheating. You can't do that. So when you have a small account, it sucks. So for those of that have a small account, I'm sorry, but it sucks, and there's nothing you can do about it unless you want to put more money in it. So, I'm here playing the game. I'm doing it, but it does take work. Okay, I'm not going to lie to anybody. I'm not going to say, look, this is the easiest thing. It's not. It's rough, but you can learn it. And it's the easy part is easy to learn. That's charts. The hard part, this is the hard part. Sticking with some of these rules right here. Okay. So, okay, easy part. Can you see why I might have bought PYPL here? Now, for somebody that says, well, it looks like it might even have a double top, you're very correct. You are absolutely right. This was even discussed in the trading room today. Somebody mentioned it. But you see that trend right there? Let me make this smaller. There we go. See that trend right there? That's what I'm looking at, that trend. And I can see this stuff without drawing all these lines, but here we go low, high, higher low, right there at price support, and then we come up here. We kind of went a little higher, but we didn't stay up there, so I'm not going to put a ton of weight in that. But what I do like is right here, that chart. Let me redo that. That chart pattern right there. We popped up, and now we're just putting in a little flag. Just a little flag right here with a pair of dojis right in here. The pair of dojis, sometimes they're helpful, sometimes they're not. When I bought this, I think this candle was green. It just pulled back toward the end of the day. So it's a 3-8 trap. 3-8 trap is it is truly one of the best entry mechanisms you'll ever find ever. It really, really is. Once you get comfortable with it, once you know how to use it, not only use it to your benefit for moving up, but when you can know how to use it for your benefit for the stop. It's pretty simple if you ask me. Now I'm going to go down and probably use that candle's low, but below the T-line, you don't want to be in this chart. Why would you? You bought it to stay up there. You bought it to go higher, right? So anyway, so there's on PYPL. Here's NCLH. I bought that today. Nice big breakout here. It looks like it's working. I'm still seeing a target of 33, maybe 34 up there. But here's the basics, okay? Look at that trend. I'm going to take it from the red dot and up and connect it here. So connecting here and connecting there. See that trend? Right there. Hey, there we roll up, here we pull back, and here we roll up again. So what I'm looking for is that to continue that way right there. I have 2 contracts. So what do you think I'm going to do if this gets up to even just $100? Remember, how much money do I need to make? Per week, just $100. So if I could get $50 out of an account, or out of a trade, good for me. Get rid of one contract, keep the other contract, make another $50. Or maybe this kind of just keeps moving up, stay with it for a few days. Maybe it moves up $300-400. Wow, that's how I double the account. Now, in all fairness, you have to be able to read a chart. This is something I can teach hands down. No questions asked. That's the easy part. The hard part is staying within your bounds. Stay within your circle. Don't get greedy. Don't be afraid to take profits. I want more. I want more. You don't need more to double your account. Oh, man. Oh, geez. I'm going to quadruple, single, whatever, maximize my account in 1 year. Because, man, look at that, right? Wrong. That is a account killer. Stick with your rules. Stick with your stops. All right? Hang in there. Okay. With that said, I'm going to put my account to bed. I've got a couple charts looking at here. SMCI is one of them. I've had a lot of people today text me with this. I might be sorry someday. I put my number out there and said you can text me. Someday I might be sorry. A lot of people here. I almost bought this today, but I chose not to. And the reason I did is we never, ever, ever, ever have to be in a hurry to get into a trade. And one of the things I want, especially since we're over the 50-period moving average now, and I will have patience, I'm not worried about that, is I want these moving averages to catch up a little bit. I want price and at least the T-line to become 1. And that may take a few days. This SMCI may very well pop up tomorrow. And that's going to separate price and the T-line. I can't buy a stock if it's too separated. I can't do it. So I've got to wait for a pullback. And I will. I'm patient. You cannot bully me into a trade. And that's what I call this. If the whole room is talking about a trade, the whole trading room during the day, half the room, even a third of the room. If we're into a trade and we all like it, a third of us get into it, and we're making money, we're talking about it, we're smoking and joking and drinking, we're having a good time, wow, look at the money we're making, yeah, Joe over here took some profits, Sam over here took some profit, William over here took some profits, yeah, I've still got some, it's working, and all of a sudden you can't stand it. So what do? You buy the chart when it's up here. Dude, you just got bullied into that chart. You bullied yourself into it. And that is one of the hard parts. You have to learn never, ever be bullied into a chart. Don't ever be bullied into a chart. So let the chart come back to you. Oh man, I'm going to miss this trade. No, you're not. There will be another one. There'll be another trade. So as far as SMCI goes, maybe it goes up. But let's not forget, this thing's in a downtrend here. It broke out today. So what? Has it proved itself? How do we know? How do we know that this chart is not going to come back tomorrow? But you had to get into it because everybody and her brother was getting into it. Don't get bullied into it. You get too far away from the T-line, price will come back. guaranteed. You get too far away from the trend indicator, price will come back. Now, granted, price can do this. Now, that is true. And you know what? If you miss the trade, you miss the trade. Life goes on. Sun's going to come up. The moon's going to pop out. It's going to rain one day, and it's going to be sunny. Not to worry. You're going to get another trade. So, be patient. Wait for it. This is one I'm waiting for. I'll wait for that, and all is good, okay? So let me answer some questions. Nethers, are you considering just price targets for exits or candle patterns? Can I add one more in there? Yes to your two questions, but I need to add one more, a third thing, okay? This right here. A third thing. How much do I need to make? Great question, by the way. Somebody, I don't know, a week, 2 weeks ago, asked me a very similar question. I think it was probably the best question I've been asked in years. You are right there with it. Best question that has been asked of me in years. I use both candle, targets, patterns, and I use this. What is my goal? Never, never, never lose sight of your goal. It is just to double your account. Okay? That's me. I'm talking about my trading now, all right? So that's what I do. So I look at all of that. Also market condition. What is the market doing? Okay? Great question. Thank you. William D, yes to all. I was listening while cooking. All right. I can smell it. Ooh, that's good. Let's see. Is the T-line your 17 SMA? No worries. And don't you worry about being asking questions. You ask as many as you like, okay? So let's cover that really quick. I apologize. I probably should have done that a little bit earlier. Let me get rid of all this right here. There we go. My pointer out. So the green dots and the red dots, that's what we call the trend indicator or the 17 EMA. The black line, that is the 8 exponential or what we call the T line. The blue line is the 50 period moving average. The dotted deuce is a 200 period moving average with some twist and curves in it. I'll show you that in a second. You can copy it if you want. And then the red line is the 200 period moving average, okay? The dotted deuce, here it is right here. Where is it? Right there. It is the 200 period moving average. It is front weighted. It is the average of the low, and that's it. So 200 period moving average. It is front weighted opposed to simple or exponential. And it is the average of the low opposed to last price. Okay? Just copy that down real quick. And there you go. All right. Okay, so this is one of these charts that I think we ought to keep an eye on. If anybody's been watching the news, you know, the chatter out there, which, by the way, don't ever, ever, ever believe the chatter. Don't ever. But you can't help not to listen to it sometimes. So the chatter is everybody's selling NVIDIA and everyone's buying SMCI. Don't get caught in worthless chatter. I'm not saying that's bad chatter. I'm just saying trade the chart, not the chatter. Trade the chart, okay? Outside of TOS, would you say the closest equivalent to dotted deuce, if any? You know, I can't. I've tried to do that. It took me a couple, I don't know, a year maybe to come up with that. I forget how long. It was a long time to come up with that. And I tried the simple 100. It might be close, but if you put it up, they're all over the place. And the truth is, Nethers, if you call TOS, they can create that. You may not be able to do it. A coder could do it, or Thinkorswim could do it for you. Okay, it's not. Yeah, anybody can do it. Yeah, You just have to get a hold of them. All right. Let's look at another chart here. Let's look at Marvel. Take a look at Marvel. Look, trading is truly, truly, truly simple, okay? And what do we want? One of the two most important rules to start with is we want that those green dots to be there. And we want price, up above them, but relatively close to them, okay? We don't want them, price way up here. The next thing we want is the SPY to be bullish. Now, when I say the SPY, that's only because I use the SPY, okay? If you're somebody that uses the diamonds, well, that's perfectly fine. That really is perfectly fine. If you use the Qs, I don't think that's so fine. I really don't. And that's because that's a unique little section of the market where the SPY, if you use the SPY, you're going to get the Qs. Okay? The diamonds kind of beat their own drum. They're sort of, they just sort of beat their own drum. But if you want to follow the diamonds, meaning is the market bullish or is it bearish? If you want to follow all of it, you can do that too. What about IWM? What about following IWM? I don't know if I would do that. And that's because IWM is IWM can't whip the market. The SPY can whip the market. The diamonds can whip the market. But just IWM can't whip it. And you need something that is truly whipping it. I think it's the SPY, okay? If somebody says it's the diamonds, I don't think I could argue with you. To start with, it's not worth it to argue with you. Okay, fine, if you want to use the diamonds. But what I want is I want the SPY to be bullish, okay? Now, let's give a possibility here. The SPY is bullish. I don't care what you're looking at, that SPY is bullish. You cannot argue with that with me. You will not win. There is no sell signal. It's trending. Let's do this. Pen. Price is above the T-line. T-line is above the trend indicator. There is no sell signal. You can't win that argument. Now, let's go look at the diamonds. The diamonds, they're still bullish. Price is above the T-line. T-line is above the trend indicator. What if the diamonds look like this today, not like that? What if the diamonds look like this? Would I still think the market is bullish? I would. Would I have great conviction? No, I wouldn't. So, when we're looking at a stock like Marvel, MRVL, I think that's bullish. I think that's a nice chart. I think we go higher. But what if the diamonds put in some big bearish ugly candle, but yet the Qs and the SPY was up? Would I still be trading? It's possible, but it wouldn't be with conviction. No conviction, okay? So we want everything working for us. Timing is important. Sometimes something like the diamonds or IWM or the Qs or the SPY can give you early warning signs, a clue. I'm not saying that's what the diamonds are doing. It didn't put in a bad candle. But what happens is sometimes one of those can give you warning signs and you're trading away because you're the smartest cat in the room in your world. You're trading away and all of a sudden you get a little over your head, maybe too many positions, too many are taking losses, but you're making money on one. So that's making you feel like Superman or Supergirl. And all of a sudden the market takes a turn when you get up to go make yourself a bologna sandwich. Now you're in trouble. So this is why it is important to make sure the market is working for you, okay? This is important to make sure the market is on your side. This is why I literally roll my eyes and it takes everything I can not to say dumbass to somebody that goes short in a bullish market. I don't care if they turn out to be right. To myself, I will shout to myself, dumbass. I'm not kidding you, all right? I do that. And anybody that knows me, you know that Well, Rick's probably telling you the truth on that. Okay? Sanford, how do you set stops? It's really simple. Don't take big stops. Don't take big losses if you're aiming to do something like doubling your account. You think that's easy? It's not. You start taking big losses, it will crush, absolutely crush your account, or at least crush your dream of doubling it. Okay, or adding some serious good money to it. So it's real simple. If you like this chart because it's in a 3/8 trap, do I have one? No. Let's take a look at docs. So if you're buying this because it's a 3/8 trap, which I don't even know for sure if it's an absolute 3/8 trap, but it's close. So if you're buying this because it's a 3/8 trap, that means that it's below the 3 EMA and above the T line. That's why you're buying it. That's why you like it, okay? Now, you also like it because of what it maybe it's done, like, a big move up. We're bouncing off the trend indicator. Big candle here. We're just putting an inside day right now. I mean, there could be a lot of reasons why you like this, but bottom line, if you are trading using a 3/8 trap as your entry, then where would you not like it? So let's go look, okay? So let's kind of reverse the situation. Would you be buying this chart if it was down here and you're looking for a 3/8 trap? The answer is no. So if this stop traded below the T line, would you like it? No. Now, don't get me wrong. There's maybe a lot of times that I would continue to hold this, and I would maybe move my stop into the trend indicator. Some things go into that. For instance, is that a great looking chart? You're going to have to ask yourself that question. Does it meet all your conditions? Is the market giving you question? There's a big one right there. Is the market giving you question? Here's one. On TC2000, that's the program you see that I'm using here. This T2123, what if this over here was moving down? I can't draw. I could do it this way though, couldn't I? Frame. There we go. I can do it this way. What if it put in a candle that looked like that? How would I feel about the market? I wouldn't allow that stock to the trend indicator on purpose. So I would not allow it to right here. I would get out of it right here, or a little below that. I wouldn't say, well, I'm going to hang on for some dumb reason, because this right here is telling you don't hang on. Let go. Don't go over the cliff with the car. Just stop, open the door, jump out, break a leg, break an arm, get some road rash, knock out a tooth, that sort of stuff. But don't die on that hill. Don't die on this hill. Don't do that. So that's how I would set stops there. Now, typically, what I'm going to do, I probably should have had some of this set up for you. Typically, what I'm going to do is look to buy close to the T line and or the trend indicator, or both. Like WU, by the way. See how that's looking? See, we've got a nice rounded bottom. I could see that as a buy. And that's where I might buy it. So what would happen if that dot turned red? That would make me not like that chart. Okay? Does that make sense? Take that SMCI that we looked at a few minutes ago. What if I bought that chart? Now, you got to keep in mind, if I bought it here and my stop was in the neighborhood, that's 19%. If I ever do that, please, somebody shoot me to put me out of my misery. All right? Please, please. And there's no way I would use my stop here. I would have to use a very tight stop because it's so volatile. And that's where I might use maybe a 3-bar chart. But even that, my stop would be a close below the 200 period moving average right now, right there. But just think about that. If you bought it, say at 42.12, a stop below that, that's 7.8%. Now, I don't know what size account you have. In my larger account, I could do that. But in a smaller account, I cannot do that. You can't afford those kind of losses. To start with, that's the stock stop. An option, 7%, that's close to 30% loss in an option. So you can't allow that to happen. And buying this SMCI today would have been a huge mistake on my part. Even if it rocks north tomorrow, I'm not going to break my rule here. Okay? So here, let me kind of sum a couple things up. To start with, I use moving averages an awful lot, which means if it's bullish based on a moving average, like a bounce off a moving average or close to a moving average, if it falls below that moving average, I don't want to be in it. I will get out of it. All right. So that's something to think about. Take UAA as an example. I could see this as a buy, but would I want it if that dot turned red? No. Now, something I'm going to do is I'm going to come in here and ask myself, well, if I buy it here, what is my total stop? 5.6%. Can I afford that? Can I live with it? Everybody's different, okay? Maybe I can, maybe you can't. Maybe you can and I can't. I will say this, something I do an awful lot is I will look at a 3-bar chart for stop. Would I like this chart if it came below 1990? Now think about it. What are my rules? All right. Doesn't matter whether I'm looking at a 3-bar chart or a daily chart or 5-minute chart, which I never look at a 5-minute chart. Never. Pit. There we go. Price is above the T line. T line is above the trend indicator. If that stops working, I don't want it. Notice these tops over here. If we get below those tops, would I want it? And that's just about that $9.99, right? So this is a 3-bar chart. Let's go to a daily chart and see where my stop is. Look where my stop just went. It didn't go down here. It didn't go here. It went right here. Now, some people might say, well, you're going to get stopped out an awful lot. You know, I'd rather get stopped out of charts with a small loss than stopped out at a larger loss. If you find yourself getting stopped out, that means you're buying bad charts. Or it means the market is not in your favor, okay? It's real simple. It's not complicated. It's really not. I don't know why, but people will, they'll put your stops tight. You'll take loss after loss after loss after loss, and you think it's always your fault. And it might not be. Maybe the market is crappy. Maybe the market is going choppy on you. It's not your fault. It's your fault you didn't recognize that about the market. That's your fault. But buying this trade, putting that stop in, as long as your rules are there, as long as you see the trade, that's not your fault. You're doing everything right. Okay? Why do I look at the 3-bar chart rather than a weekly chart? Why not? Alex, the whole point of what I'm doing here is I want to buy a chart and keep my stops tight. That's what the question, Stanford, okay? Stanford. That's the whole point of what we're talking about. If you have a small account, now you may have a big account. An example, I will trade my $200,000 account so different than I trade this account. It's like night and day. My $200,000 account, I'm going to put my stop down here, and I'm just going to let it roll around. Just let it go. I'm not worried about it, okay? But a small account, you cannot do that. So if I look at a weekly account, what's the weekly account going to help me with a small account? Now, maybe you're referring to a larger account, in which case you might be right. You may be right. I look at the weekly account on weekly chart, and I see a rounded bottom breakout. I automatically look at the 200 period moving average as my target. So I'm willing to give it a little bit of room here. The thing of it is I don't trade with a weekly chart. So I'm going to trade with a daily chart regardless. I still see the rounded bottom breakout in the weekly, and I will put my target up here, but I'm still going to trade based on those dots being green or red. Now, hindsight is a wonderful thing. It really, really is. But seriously, would you want to hold that if it broke down there? Now, again, hindsight is a wonderful thing. You can see it went sideways, and you can see that, wow, if I would have held it. But you don't get that privilege when you bought this chart up here and now those dots turn red. You don't get that privilege of knowing that because you don't know that. All right. So if it does this and those dots get red, I want out of that thing so fast your head will spin. All right. So I thank you. Okay. But anyway, I don't trade with the weeklies so much. What I do is I look for things like weekly rounded bottom breakouts. I love those because those give us great targets in a very nice bullish trending chart. Okay, very, very nice. Let's take a look. Let's take a look at Nike. All right, look at Nike. I love Nike. It looks great, doesn't it? It really does. Only to about here, and then it looks like garbage to me. So if I actually, to tell you the truth, only to about here, I really don't see a trade in Nike. Don't get me wrong. I love the chart. We've got an inverted head and shoulder. You've got a nice, gap down, little bitty tiny hammer, nice candle here. You could even say a morning star signal. You've got great follow through. You've got a great pullback. You've got a great looking chart right here. Low to a high. Look at that. Oh man, that does look nice. It really, really, really does. It truly does. Okay. Except, where's the future of this thing? Is it worth the trade? And I'm not saying it's not for somebody. It's not for me. Because right here, you've got to deal with that 50 period moving average. And believe me, you will have to deal with it. I'll take that bet any day of the week. I don't want to deal with it. And then if it breaks out, you're going to come right up here to the 200 period moving average or this downtrend line. So what are we talking about? It's going to come over here, right? 7%. You want all that hassle for 7%? Why would we want to do that? I have screen too. I got screen. Everybody should have screen. All right. Yes, this is being recorded, Alex. Absolutely. All right. So if I look at Nike, I love the setup here, but I don't particularly like the trade because there's no great future in this until it breaks out. Okay, until it breaks out. Now all of a sudden we have a future. So Nike, I love the little price action here. I don't particularly like, the trade of it here. Does anyone have any charts you want to look at? Does anybody? Any charts? PLTR, sure. Are you in it? Please make sure you let me know that you're in it if you are, okay? Because they're treated very, very differently. They really are. You're in it, great. So let's look at this chart. Look at that beautiful trend. So let's put a line up here. I'm going to go from that red dot to that green dot right here. You've got a nice trend. Here we've got, you can see we pop up, hit a high, back down, pop up. I see the possibility of moving sideways a little bit, but I see a very bullish chart. I see a great chart. So maybe we move all the way over here. Maybe we just start breaking out. I wish I could tell you that. I really do. I truly do. I can tell you that the chart meets every criteria that I would want to be bullish. Doesn't mean it's going to work out for you, but it meets all my criterias. Price is above the T line. T line is above the trend indicator. Trend indicator is green and working. There looks like to me, I have a target of 84.5 up here. You've got a nice little pop out of the box forming right now. I think that's a beautiful chart. So thank you very much. Let's see, Gilead. GILD. In it or not? Please, let me know if you're in them or not. Because it does. It makes a world of difference on how we look at it. For instance, Gilead is not a buy for me. Not even close. And the reason is it's been up 1, 2, 3, 4, 5, 6, 7, 8, 9 days. It's been up 9 days, and then we're right here where this stock crowned. So that's not a buy for me. On the other hand, if you're in it and it's working, maybe think about some profits, maybe, raise that stop in there. Let it work gently with a stop. But I don't particularly see it as a buy right now. Okay. It would need to pull back. Like I say, 9 days up, I need to pull back. Rob. COHR. You're looking to buy? Well, let's do this right here. You know what? I kind of like that too. Let's look at that weekly. Look at that nice consolidation right there. Woo! Can we say pennant? If you look at the daily, I can see the pennant too in there in the daily. A nice pennant. So let's work this chart from the top, okay? So what I mean by that is let's look at the weekly chart. We're making some all-time new highs. Okay, that's cool. So we've got no real resistance to the left. That is very, very cool. So based on this chart, $103. Let's round numbers, okay? When we get to $100, stocks like to move in $10 or $20 increments. So there's $100. I'm gonna go right to that 120. I'm gonna go right to that 120 up there, and then I'm gonna jump right to 140 up here. Okay. So there's two targets based on round numbers, just simply round numbers. Now, with that, let's do this. Let's draw this like that, just like that. And then I'm going to draw this, just like that. Yeah. So now that we know what our target is, I think we can agree we both like the chart. I do. I think it's a very, very nice looking chart. I don't think it's a buy right now. Not for me. But you got to remember, there's a whole lot of people that think it is. And that's okay. Everyone's different. Not everybody has the same bowling ball or the same set of golf clubs, okay? So my set of golf clubs, my bowling ball says, let's wait for it to break out. Let's wait for it to break out. Let's wait for it to break out even up here. All right, I'm going to change this color so we don't get too many colors up here. There we go. Now, what if we waited for that? Our targets have not changed. So let's say we buy it on that breakout. Do you know that it's almost 24% to that $140 mark? Do you think so? And there's no answer that's wrong here. All right, there really isn't. It's what you want to do as a trader, just like what I want to do as a trader. For me, I would consider taking this on a breakout and a pullback and buyers. But where I lose my nerve is we have this top and we have this shooting star. So I lose my nerve on it. Not worth it. So maybe what we need to look for, what I would look for, is just break your... What you doing here, I could care less. Just get yourself broken out, come back and test, and now let's look for a buy signal, and let's look at make it 23%. That's what I would look at. But that's me, okay, Rob? That's important to understand. All right, important to understand. Thanks, Alex. So I forgot what Gilead was. And you know, I hope everybody understands that take Gilead, for instance. I don't like the trade as an entry, okay? I pointed out why. 9 days, we're up here. I'm a short-term swing trader. How do we know that Alex didn't buy leaps on this thing? How do we know that Alex didn't buy contracts 2 years from now? How do we know that? We don't. We don't know that. How do we know that Alex doesn't have a brother-in-law that works for Gilead and says, hey man, you better buy a lot of this because it's going to $500? How do we know that Alex is not buying this for the long term? This is why I tell everybody, be your own trader. Take care, Ed. Thank you very much. Good night. See you tomorrow. Thanks, Ed. I'm a short-term swing trader. I'm a hit and run kind of guy. So what I want to do is, let's turn this blue. I want to be in the stock, say, when it pulls back, and then it would need to pull back because it's up 9 days for me. I can't do that. I would need to see it move up. Now, I could see that trade up there, but that's me. I'm not saying this is a bad trade at all. I'm just saying for me, it's not a trade I would be buying. If I owned it, I might move the stop up maybe. In the small account, I would close it and take my money, but two different accounts. So thanks, Alex. Thanks for playing along. Appreciate it. Trump tariffs will, in fact, curious. You know what? I pay absolutely no attention to that whatsoever. All right, zero zip, not a none. I don't think TC 2000 even does DXY. Oh no. Let's look at UUP, the dollar. All right. Okay, so let's talk about that. Look, I don't care who's president. I really don't. I really don't care. It's not my job to worry about what Trump does on tariffs. It's not my job. I mean, look, the guy's not going to call me up and say, "Hey, Rick, what do you think we should do?" You know, he's not going to do that. He's going to call his buddy Tesla up. That's what he's going to do. So I'm out of the loop. So let's do this. Let's not worry about what's in the news on what may or may not happen. Why don't we worry about what the chart is doing? Let's just focus on the chart. It's truly that simple. Here's a chart that I really, really like. Oh, that's right. I forgot. Well, dang it. Let's stick right here, I guess. We'll use the weekly here. I got to remember to fix that tomorrow. Usually a dark background. So let's just take this chart. I don't care if it's the dollar. I don't care if it's a biotech. I don't care if it's Ford or GM. I don't care. Let's just look at the chart, all right? And let's focus on the chart. Look how that black line is above the green dots. See that? Black line above the green dots. See how the black line is below the red dots? And then back above. It's real simple. When the black line in price is above the green dots, that's bullish. When the dots are red, that's bearish. So right now, UUP, dollar, is bullish. Looks like to me it's going up until it doesn't. But trying to figure out the future or what's going to happen and trade with that, I can't predict that. Nobody can predict that. Don't get sucked into people that do think they can predict that. Don't do it. All right. If you have another question, here, please ask. It's real simple. Just follow the chart. Maybe that's nada. Okay. QCOM. Not in it, and I wouldn't be in it. Why would we want to be in it? See, I wouldn't want to be in it. All right. So SJ, I'm gonna let me kind of be in the spot for a second where you paid for coaching and you spent money for private coaching and you continually have losing trades, and I ask you, show me a trade that you're interested in, and you put SJ here. Now keep in mind, we set the plot up, okay? We set it up. You continually lose trades. you've lost. You have $100,000 account, and over the past 6 months, you're down $60,000. Okay. Finally, you say, "Hey, Rick, can I, get a couple hours coaching with you?" Okay, let's do that. Now, at that point, I'm your friend, but I'm not your best friend. Okay. And what I mean by that, well, maybe that is your best friend. My goal is to help you try to get your $40,000 back. And it's my goal to get you back into making money. Nobody in the long run, and I've been trading for 36 years. I've been educating for, 20 maybe. I'd have to go back and look. And I know what I'm talking about here, all right? I know what I'm talking about. And over the long haul, nobody comes out a winner in the long run buying charts from the bottom. Nobody. So why don't we let that chart turn bullish? An example would be, this would be the bottom over here. See how it turned bullish? And that's what we trade. So let it turn bullish. I can kind of guess maybe what you're looking at. Oh, we have a triple bottom, all right? And we may very well be carving out a bottom. We absolutely may very well be doing that. But this chart doesn't even come alive till you break out of this 180 mark. That's where it becomes a chart to trade. Now, look, from here to here is certainly a trade. But right now, the bears own this chart. I don't care about that big candle there. I don't care that it made a low, high, higher low. Not until it means something. And it doesn't mean a doggone thing. So, again, if you paid for coaching, if you're down $40,000, I'm going to come unglued on you on this thing. And we are going to learn about trading within a trend. Okay? So, thanks for letting me put us in that situation. This is how I am so much against trying to pick a bottom. I'm just so much against it. It's not even funny. Most people lose money by trying to do that. Most, not all, but most. Okay? So 180, and then let's turn up the heat. And, here's something too. If 180, and right now, I think my big target, if I had a big target, would be up there. If 16% is not enough money, I don't know what to tell you. I really don't. 16% of a $180 stock, $200 stock, whew, that's big money. Big, big money. Hey, Nethers, NUS, I almost bought that today. Almost. Long, RBB setup. Yes, it is. Seems like today would have been a busy, would have been a buy maybe. Yeah, buy. But I was hesitant. I was hesitant to buy anything till today, to the very end, to make sure the market was going to hold up. Talked about that in the trading room. That is a great chart. That's on my watch list right now. It's a rounded bottom breakout. Simple target here at the T line. These are main targets. There's several targets along the way, but those are what we use for rounded bottom breakout main targets. But yeah, that is one we need to keep an eye on. Absolutely. Would somebody be so kind to draw me a line down there so I know we can't do any more below that? Okay. Hey, William, what is acceptable return for a large account, say $200,000? Well, you see, there's one of those trick questions right there. That really is one of those trick questions. See, William, I don't know anything about you. For instance, and I'm not looking for answers today. We can look at it in the room, okay? But here's some questions that I would have to know before that, because what's acceptable? What's acceptable to me means nothing to you, all right? And this is where this is so important. The more I look at this chart, I'm talking and looking at, that's a very nice cup and handle, by the way. So, You see, $10,000 return could be very, very acceptable to you or to some people. If somebody had a $200,000 account and they made, by the end of their year, their account was up to $210,000, they could be so happy it's not even funny. Well, that's acceptable for them. But somebody that that has a track record, somebody that can say, you know what, I've been trading for 10 years. It could be a year, I don't care, but let's use 10 years. And you can show on paper real money, not play money, not a paper account, but real money. That, man, last year you made $30,000 on a $200,000 account. Okay, well, let's talk about turning a $200,000 account into a $300,000 account. That might be acceptable too. Okay, what was it? I guess 23. Yeah, 23, $100,000 account. In 24, it was 14 months, 15 months. It was 14 months. It was a $200,000 account. So, is it acceptable to double your money on a $100,000 account? For some people, yes. For some people, no. You see what I'm trying to say? It's not something that you can say is, well, it's acceptable to do this. Now, there is a rule of thumb, 10%. There is kind of a rule of thumb, maybe. So 10%. So take a $200,000 account and turn it into a $220,000 account. That could be acceptable. I hope that makes sense. I hope everyone understands that. Just because, it goes back to the days when your mom would say, look, if little Johnny jumps off a bridge, are you going to go follow him, Are you going to do that? No. Your mom wants you to say, no, I'm not. So it's, you can't, there's no number that you can put on it without knowing what you do. All right, what your history is. I hope that helped. I'll be glad to help you when we can really crunch some numbers, okay? I don't think in public is the place to do that. Not really crunch some numbers. All right. Google. I mean, I don't know. Google, long or short, I don't know what you're looking at. But long, do you see a long trade there? Look, Google to me is going to go higher, okay? I think Google goes higher. Can it go lower a little bit before it goes higher? Yeah. But I think Google goes higher. Okay, that's just an opinion. If you look at that chart, does that look like a bullish chart? I'm going to say not so much. I'm going to say we need, you know what, forget that. Yeah. We're going to need maybe to hop over that line. Let's look at the weekly chart. See, all that, I don't know. I don't, you're going to have to get over that line right there. There's just no way to get out of that, in my opinion, Samuel. So if you're looking for a long-term trade, I wouldn't even worry about price action. You're 4% away from the 200 period moving average. I'd buy it all day for a long term of trade. Wouldn't worry about anything else. But for a short term, for a trade, I think it needs to set up better myself. Hey, Alex, thank you. Wow. Man, long way. Thank you for being here. Appreciate it. Let's see. Me too, not a here. Refresh, don't help. Refresh didn't help. No screen. Tesla, sure. Tesla. There we go. Tesla's still bullish. Right now, it's just moving sideways. I still have a target of 412 up here on Tesla. Take a look at that weekly. It's getting a little stretched maybe on the weekly. 2-day, 3-day, 4-day. It's just kind of moving sideways. Bottom line, Tesla moved up a little too fast, too much, too quick. And it needs time to digest. And that's what it's doing right now. I still think it goes a little bit higher. Hey, man, what could you want? You've got, the president's in your pocket or the president's in your pocket. Who knows? You own a electric car company. Come on, Tesla to $1 billion. I mean, and I'm not trying to be ugly or mean to anybody there, but think about it. All right. So just remember to trade the trade, though. Trade the chart. William, March long. I think that's, thanks, William. Looks good. APPN. That's a nice chart. I'm going to flag that one. Thank you very much. I'm going to write that one down on a piece of paper. Oops, on my hot list. APPN. That's a nice chart. Thank you. So it got a little too much, too far, too fast. We pulled back, and now we're just bebopping around right here. I like that. I like that a lot. We've got a low, a high, a higher low. So I'm thinking breakout over this candle, or even we take, we'll take it from here. There we go. And I'm taking it from there. I was going to just shoot from here, but, from these lows, and it turns out to be there anyway. I just went from where we took off down here, red dot turned to green dot. That's where I'm going to put my line. I do that a lot. And then run right up to this one right here. You can see that trend. That makes sense to be buying in here and on a breakout. Let's look at the weekly chart. Oh, ouch. This is a rounded bottom breakout on the weekly. We're dancing with the dotted deuce right now. We break out over that dotted deuce. 200 period moving average is a target. It can move, so you have to adjust that line. And then we're going to put another line right up here. And then I think we should put a line right here too. There we go. Wins earnings. Good. I like that chart. Let's watch that one for a trade, you guys. Did that? You're already in it. Way to go, Rob. Already in it. That's a beautiful chart. Target up 45 and then up from there. Thoughts on DAL, Delta? Neither. If you're looking to buy it, neither long or short, Don. There's no buy signal here. If you're already in it, I'd stay in it until that dot turned red. I mean, the trend is still there. I mean, here, nice bullish uptrend. We're just moving sideways. We've got a high wick here and a high wick there. So the reality is it needs to break out before it does anything. Before you can call it. I don't know. We'll look at that trend right there. So, I mean, overall, if you're already in it, I'd stay in it. But to buy it, how about we wait for the breakout? What are we going to do? Risk and play around for 3.5%? Probably not. Thank you, Frank. All right, everyone. Thank you very much, Frank, for drawing that line in there. Appreciate it. I'm pooped. I'm tired. My mornings start early. I do want to thank everybody. This is being recorded, and I will get this recording out to you tomorrow, okay? Thank you so much, everybody. I think Ed put a link in there for our open house. We're having an open house next weekend, so you'll see live trading, what goes on in the trading room. And then we have that class coming up if you're interested in that. So we'll see everyone. You guys take care. Sleep well tonight. Bye-bye.